Yeah, premiums are coming down.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, and it is that time once again for this week's physical silver market report with Andy Schectman of Miles Franklin, who handles physical, unlike the paper products out there such as SLV. So, Andy, great to have you checking on in here. How's everything going with you today?
Good, my friend. Good to see you, and good to be here. Thanks for having me.
Well, good to check in. Weekly update. I know people like hearing what's going on in the physical market. Although, as we will touch on before the call is done, apparently we're gaining some institutional viewership to our program here and some of the folks who are more well versed in some of the bank paper products. But we'll leave that aside for now. And could you just fill people in on what you've seen this week? What's the pace of the order flow like? What are customers doing, and what's going on out there?
Yeah, premiums are coming down. They're it's probably the best environment to buy coins and bars that I've seen in quite some time, at least a year. The premiums are, for the first time in quite some time, sliding downward instead of moving upward, and it's a function of summer. People are outside, they're planting gardens, they're going to the cabin, they're enjoying themselves, and so order volume in the month of May is typically the lowest of the entire year. Although the last few days it started to pick back up again, and so there's really no rhyme or reason. All I can simply say is that our latest price sheet that we put out had most of the coins revised downward, most of the bars revised downward in terms of premium. So decent availability, decent price, and at least as good as it's been in quite some time.
And are there any particular products that people are looking at these days where you could give us an example, perhaps some numbers on how much a premium came down so people can just calibrate that appropriately?
Yeah, for example, like the UK Britannia, which we have on special this week at $5 over the price of silver, has been north of $6 for most of the last year, as is the case with most of the 1 ounce coins. The 2022 Silver Eagle, I believe, came down 75 cents or $1. Junk silver has come down 75 cents to $1. So you're talking pretty decent revisions downward in premium on most of the things that are sought after in the silver universe. And look, premiums have gotten pretty high over the last couple of years, so this is a welcome revision downward, but nothing to write home about in the respect that even at $5 over, you're double the premium that we saw on those same coins for my entire career. $2.50 for a Britannia would have been about right most of my career. At $5 right now, it's still high in comparison to what it's always been, but a nice break from where it has been recently. So, it's just a little bit, but in this market where, especially in silver, where you're getting lots of volume, every little bit helps. So at least worth mentioning.
Although I wouldn't imagine we've heard any update out of the US Mint or that they're starting to produce coins again. Is anything going on there yet?
Well, there really hasn't been. Mum is the word, I guess you could say. There hasn't been a lot of information coming out of there. The sad truth of it is the premiums are just too high. And the crazy thing about it, look, is that the mints, the US Mint sells it to the primary distributors for a fixed price of under $3. And the primary distributors are the ones who are the gauge, the ultimate gauge of supply and demand. And so on one hand, I don't begrudge them for selling them much more expensive than they're able to buy them for. On the other hand, they're certainly, you could argue, limiting the exposure to the coins in the respect that, look, these companies, some of them publicly traded, make a living selling coins to the world, to companies like mine all around the world, not just in North America. And they got to be wondering, well, heck, if it's this hard to get product from the mint, regardless of the price we're paying, what happens next? If they have uncertainty, are we going to be able to get supply to keep our business moving? And if there's uncertainty regarding future supply, then higher premiums are justified by the primary distributors. This is not a function of retail price gouging whatsoever, and you can evidence that by the high premiums that we are paying to buy Silver Eagles and other items back. And So the majority, a very large portion of the premium you'll find on the buyback side too. And the reason that there's a decent spread between buy and sell is that if I'm paying, let's say, $7.50 or $8 over spot to buy back Silver Eagles, and someone sells me 12,000 of them, and I give them $100,000 in premium, that's not hedgeable. So there has to be enough room between buy and sell to kind of de-risk that position a little bit. And so you have high premiums, you got wide spreads, and it's been that way for 2 years. The fact that we've seen a little bit of relief right now, whether it be Silver Eagles or anything, it is great as far as I'm concerned. But I don't know how long-lived it is, because typically, like I said, May is the slowest month of the year. I went back 10 years, and it's a pattern that we see continuously. As you get closer to the end of summer, you typically see premiums start to rise again, interest start to rise again, and even price start to rise again as soon as we get anywhere near Labor Day. So this is kind of a sweet spot for people looking to get in at a good price with decent availability, immediate delivery, pretty much the lowest premiums we've seen all year.
Okay, and I'm curious, has there been a difference in the way gold customers have been acting, where we see gold still not far off from that $2,000 mark, 1840, 1850, versus silver on the lower side of its range, certainly relative to the highs from 2011 or 1980, a lot lower. Has there been a difference in the two groups?
There has been more interest in gold lately. It's, typically when you have larger transactions, people selling a property or coming into a large chunk of money, a lot of it will often go into gold just because of the logistics. There are people who believe that if you don't own it, physically hold it, you don't own it. And so they're not really interested in silver for large purchases because they're afraid of the logistics. And this is a small segment of people, but so, larger purchases tend to gravitate towards gold just naturally. And we've seen an awful lot of it. But here again, the interesting thing about gold when you compare it to silver is that the premiums that you're paying on gold are pretty much where they were my entire career. They haven't really taken off the way that you have seen in silver, which across the board are double or more from anything I've ever seen. In the case of Silver Eagles, they're 4 times what they typically were, and they've come down. They've been as high as 5 or 6 times normal premium. So in gold, I would say there's a growing interest, and the premiums that you're paying are not reflective of that growing interest yet. In fact, they're on par with bear market averages in the 90s. So better value premium wise in gold, but better value overall, arguably, in silver. And that value that I think is inherently understood by the retail buying public still means the majority of all the sales we do have silver in it or are entirely silver because of the inherent value in silver. So much so that it's easier to ignore the premiums. But it is that huge demand that created the high premiums to begin with, where you had supply chain issues, disruptions in getting product, and massive demand. So you have higher premiums because the distributors all the way down don't know when they're going to get their next shipment. And this has been a consistent theme for 2 years. It hasn't really spilled over into gold yet.
Well, certainly will be interesting. I saw earlier this week, Jerome Powell was now saying that there is a chance of a recession. Where that leaves things in his fight against inflation, we shall see. Although something another guest mentioned on my show recently was that back in 1980, as opposed to 2011, there were people lining up at shops to buy silver. I don't think we saw that in 2011. You can comment on that. Although I'm curious, people have also talked about on the sell side that once the prices start going up, we see a lot of the, hey, cash for gold, cash for silver. Gold on the higher end, has that happened there on the gold side at all?
No. Selling represents the only time in my entire career that selling was ever an issue was 2017. And this is when Bitcoin first made its move on the scene. When it really took off, there were a lot of people who sold gold to buy Bitcoin. They assumed it was cut from the same cloth. A lot of those people did well. But that's the only time in my career where selling really was ever an issue. You don't see people selling right now because gold is near its all-time high going back into fiat. But what you do see an awful lot of would be people trading their gold at a 85-to-1 ratio, and where the price is less relevant than the ratio in this case, and switching into silver. Because the last time we had 85-to-1 ratio, or the first time I noticed it, was 2010. And within 8 months, anyone who would have switched their gold to silver could have switched back to gold at about 37-to-1 in 2011 with $50 silver and $1,917 gold or so. So we don't see as many people selling to go into fiat, but we see them selling in switching into silver because the ratio is so out of whack in proportion to gold, historically out of whack in its relationship to gold. So nothing in the way of outright selling, though.
Well, will be interesting to see how that goes playing out forward. I hear Andrew McGuire in his recent podcast talking about a BRICS currency basket that's being moved forward at a more rapid rate. Ronan Manley had some coverage of further news from Russia. So we'll see if silver gets included in any of that. Certainly would make sense to me. Although, Andy, believe it or not, it turns out we have a critic in the audience, which is certainly okay and welcome different opinions. Although, as I mentioned earlier, it does sound like we're getting institutional coverage now, because none other than Jeff Christian of CPM Group was actually commenting on our call last week. And I thought there were some interesting things here. Certainly we can take a listen, and then I'll have a few comments and get your response as well.
We're seeing another strain in the market right now, which is apologia issued by people who have been overly promoting silver. And there was a very funny one that was released on Saturday. Two guys, one guy, saying, "What if we were wrong?" And one guy I think has been in the market probably for a year and a half as a.
Just for anyone who did not hear last week's call, where that was the tone, could we be wrong about silver? I think the first guy is referring to is me and my year and a half of experience. So I'll keep plugging away at it.
Quote, silver pundit. And the other one has actually been in the market hawking silver as a retail outlet for years. And it was very funny because they missed the point. They said, what if we're wrong? And what their discussion was, what if we're wrong and the price doesn't rise to $50 or $500 soon, the way we've been saying?
I got to hop in there for a second. I've certainly said I think silver is undervalued, along with a lot of other people and guests I've had on the show. But I think if you read through the book or read through the episodes, I've gone out of my way not to put headlines of silver's going to X hundred.
And let me just chime in too. I think it's Jeffrey who's missing the point. We never were talking about where silver should go or when it's going to go there. We were simply speaking about how sometimes logic, economics, mathematics, all of these things that would lead one to believe silver is undervalued and outcome aren't always correlated the way that we would think or when we would think. And maybe our timing has been off. Perhaps it has been a little bit skewed, but that's not what we were saying. And ultimately, we weren't talking about price, but even just looking at it from a standpoint of logic and mathematics, if you realize that a 42-to-1 ratio has been about the average between gold and silver for the last 100+ years, you divide that into the price of gold right now, silver should at least be $44 to be in line with where it's been historically. Divide it by 7, take 1850, divide it by 7. According to Keith Newmeyer, that's what it's coming out of the ground at. It's $265 an ounce. So yeah, it is undervalued. And the economics of it, the logic of it, the manipulation by the commercial banks, which he goes on to poo-poo. I mean, that's crazy. I mean, JP Morgan and a $920 million fine, the interview you did with Bart Chilton, there's so many. Just look at the way the market behaves, where it falls straight off the cliff at the AM fix and the PM fix. And he's the apologia who was apologizing for the manipulation on COMEX. And don't get me riled up or started. We weren't doing anything but trying to humanize what is something that everyone struggles with in this industry. And that is that logic and economics and mathematics and all of these things have sometimes a lagging correlation between reality and outcomes. So Yeah, I don't know. I think he's a funny guy.
Well, interesting that you said he's the one who's an apologist, because I have heard his view on the JP Morgan fines, and he said it was a lack of oversight. Gee, that's being awfully generous. And certainly from the Bart Chilton interview, there were some things where he got into more or less detail, but what to me, perhaps the single most impactful thing was when I said, my understanding, I don't get to see the trading records, but you have. And my understanding is that if silver is trading $25.05, you get some selling pressure, you nudge it a little bit, then there's all the stop orders at the $25 level, and you get the algorithms kicking in. And I hear these reports that it's always the same banks buying it back cheaper. And Bart Chilton says, yes, that is what happens. The only difference now is that the moves are bigger. So that is what it is. He seems to be more okay with some of that. I mean, JP Morgan's on repeated deferred prosecution agreements. And in the end, what he's accusing us of is saying that it was going to go to 550. Yes, I know there are some people out there that say it's going to go to $500 in the near future. I'm pretty sure that I've never said that. And I'll say that also in the book, The Big Silver Short, you talked about how a lot of the things that we've talked about that you've talked about have taken longer. Yet again, gold at 1850, I think, is some sign of concern about the things that are going on. And the fact that if what I was saying is simply that, all right, well, there has been a lot of inflation. Silver's still only at 22. So the part of me as an analyst that always looks for any explanation of what's going on, but we'll continue on with just a little bit more here.
And their self-response was, well, if we're wrong, it's a matter of timing. Like all good fundamentalists, they failed to say or think about or speak about in public the idea that their fundamental basis for everything they've been spouting, in the case, one case 2 years, in another case decades, may be fundamentally wrong. Maybe there isn't a massive conspiracy to suppress.
Real quick there, the fundamental basis, I would say if there's one thing I've been more confident about than silver, was that the Fed was going to turn this into a disaster. I said that 11 years ago, 12 years ago, and that's exactly what's happened. It took longer. They've left interest rates lower, but now, look, here's the day of recording. Powell tells Congress the Fed is strongly committed. Now recession is a possibility. He didn't say what he's going to do with the higher mortgage rates. Here, I'm seeing videos, bank runs in China. Here's Kremlin confirming intention to back ruble with gold and commodities, which they've done to some extent. Here, Russia lines up its state fund of precious metals for military mobilization. And when he says about the grand conspiracy of the metals, I mean, again, here's the famous Deutsche Bank where they say, let's go and smash it together. These were on the trader transcripts that he doesn't think are that serious.
Yeah, I mean, I think it's laughable, to be honest with you. And don't even mention the relationship between Saudi Arabia and Russia signing a joint military cooperation agreement. And the same thing with Nigeria. The dollar is the world reserve currency because of its petro reserve status. The fact that we've protected the Saudi kingdom exclusively since 1974, giving us the honor of being the world reserve currency, because every country in the world has to have dollars to buy oil, which is now being challenged by Russia and China, striking relationships not only for protection, but also to sell oil in yuan from Nigeria and negotiating with Saudi Arabia. This is why we say the things that we do. It's not we're waiting for silver to go up in a vacuum. It's that the dollar and this Western-based system, which is an ocean liner, it's not a speedboat. This is a high-stakes game that's going to move slowly. But when it does, it's going to be like that. And it'll happen on a Sunday night. You'll wake up on Monday morning to a new reality. OPEC issuing that oil in other currencies, or a coalition between the BRICS nations issuing a gold-backed currency. Like that, it's over. And this is why gold and silver will be the last man standing. This is why the price will go higher. But I think both of us have been consistent in saying, when that happens, be careful what you wish for. That'll come at the expense of the dollar and everyone around you. He misses the point. We're not talking about people getting rich. We're talking about people relying upon 5,000-year-old wealth in the midst of all this craziness and chaos that keeps accelerating day by day. You just showed all these stories. I mean, every day there's a new story. There's something else to make you say, hey, well, maybe we should ease up on our dollar position and favor historical wealth. We're not talking about getting wealthy. We're talking about accumulating wealth, and it will express itself in time. And when it does, it may not be a great thing. So I don't know. I think he's just twisting around what we were trying to do as being sympathetic, not only to ourselves, but everyone out there who's experienced the same anguish over the fact that things haven't played out the way that we had anticipated yet. It doesn't mean that it won't. And it's frustrating. So he's spinning it around and saying we're wrong. And we're saying, hey, hang in there, have strong fingertips. Everything is pointing towards problems with the dollar and the system, and gold and silver are a life raft for that event. And if you're buying it to get wealthy, I've been consistent every time I've been on YouTube, I say, hey, gold and silver are wealth. They are not to get wealthy. They are not an investment. They are wealth. And that's why we're telling people to accumulate it. Because I, for one, would rather have a whole bunch of gold and silver than a whole bunch of exposure to this system right now that is teetering in so many ways on the precipice of major change. So that's where I come from, Chris.
Yeah, and I think perhaps part of the underlying difference, I don't know if I would say that Jeff is a Keynesian, although I heard in one of his videos a couple months back, he was saying that these people who question whether the Federal Reserve knows what they're doing, that's complete insanity, where it's like, I don't know what view he has of this, but I mean, this is the same Fed that said transitory. Well, oops, we were wrong about this. No recession. Now they're saying they're wrong about that. I mean, some of these are going to go down with Ben Bernanke saying subprime is contained. So, I guess it depends where you mark things from. I mean, there's gold from $35 to 2,000 over the last 50 years. So it has moved. And
well, it's interesting you say that. My friend Chris Irons from Quote the Raven just put out a piece today. I read it this morning, and he showed date by date by date by date all of these statements that Janet Yellen made, and all of them completely wrong. And there were like 30 of them, and it was like, wow. And then at the very end, she says, well, maybe I was wrong on a lot of this stuff. You can go back to Bernanke and the subprime crisis, and you go on forever. They've been wrong. They were wrong when they told us it was transitory. I mean, and they were wrong when they said it wouldn't become structural. They were just been wrong, period. And so, for him to say that just goes to show that he's the one apologizing, and he's the one that's a little bit more naive than we are. We're not talking about any guarantees or getting rich. We're just hedging our bet on history and historical wealth. And there's a million reasons to believe that we're right. So I don't know. It's frustrating to hear someone say that kind of stuff. And he's supposed to be a spokesman for the metals industry. It doesn't seem like much of a spokesman to me. Quite to the contrary. It seems more like a mouthpiece of someone else.
Well, in the end, you have those Deutsche Bank trader transcripts, and whether you want to call it a conspiracy, actually, I think this would confirm it, because you have UBS and Deutsche Bank. UBS, we smashed it good. Fucking hell, UBS, now you make me regret not joining. Keep it to yourself. Now, this isn't, we don't know who pressed what button on the thing, but you look at May 11th, 2011. This is 10 days after silver's at $49. On the day that they smashed it good, it went from $39 to $35 there. So if you want to say that this is somewhat inconclusive, maybe not enough, but actually, what was enough for them to pay out $38 million, which seems a bit light to me because I lost to that one. So the idea that silver could go to $50, it went to $50. Why did it go to $50 then? That was after Bernanke had started QE. And the balance sheet is 10x since then. The Fed's balance sheet, 900 billion before Lehman, now 9 trillion. And silver went to $50 in 1980 until they made it sell only. And again, I've asked Jeff before if he wanted to comment on Paul Sarnoff saying that Jay Aaron was one of the shorts that got bailed out there. I've not heard any comment. And Jeff, if you're watching and you want to answer some of the other questions, then I'll keep it respectful and do that. But to say that nothing is happening here, and then JP Morgan, doing exactly what Bart Chilton describes about, you know, that's not a good look. And I understand maybe some of these banks are his clients and and he doesn't want to speak against them. That's fine. But here's another one from Paul Volcker's book. I'll play a second of this.
Page 61 here. These are Paul Volcker's words, not mine. And I thought it was worth reading. So, two events in 1968 had disturbed already unsettled international monetary affairs. Strong public demand for gold had required intervention by major central banks, which sold gold from their reserves to prevent the price from rising above the long-established $35 an ounce.
All right, so it's a conspiracy. Paul Volcker's describing it, major central banks selling gold to prevent the price from rising. So when he says that here, I mean, fine, there's a conspiracy, there's the evidence of it. And the only thing I was saying last week and that you were commenting on is that, all right, well, silver seems like silver should be higher. Although even if you forget the conspiracy, we have a supply where there's some finite amount of silver plus what comes out of the ground, but an expandable contract supply, which we've heard the LBMA comment on in their report, how the price started rising during Silver Squeeze weekend when they stopped writing contracts. They actually said that. There's the same clients. He's assuming he's friends with them.
Suppress silver and gold prices. Maybe the dollar's not going to collapse. Maybe the financial system that's been in place for about 500 years is not going to collapse.
No, this financial system hasn't been in place 500 years. The Fed's only 100 years old. And if you want to say it's going to take 20 years, if they're going to stretch it out 50 years, I don't think that's going to happen. But to say that is he looking at what Russia is doing, what they're saying?
Well, what financial system is he talking about that's been in place for 500 years? I'd like to know.
Well, we'll finish up. There's only a little bit left here.
They failed to take into account when they said, hey, what if we're wrong? They failed to take into account that the fundamental bases for everything that they say, whether or not they believe it, everything they say may be wrong.
So again, that's absolutely silly to me. The only thing I said I could be wrong, maybe there's some factor that I can't think of that the silver price. But if you want to talk about the underlying fundamentals, that part we've seen, I told you 10 years ago it was going to happen. It's happening now. The fact that it hasn't gone up faster, I think, there you go. You ask his clients if Deutsche Bank or HSBC are clients. So if you have
the only reason I'm going to even give him any respect at all is he didn't throw your name out or my name out, making it more egregious than it already was. I mean, it's pretty easy to figure out who it is. At least he showed a modicum of class, but I think he's the one who misses the point altogether. And, I own a precious metals business, so I guess I've been hawking precious metals for 30 years. But by the same token, I mean, if people can't tell by now how committed and convicted and 100% all in I am personally into this foray. I mean, I am fully invested in precious metals in every single way, and I am doing it for my own good, not just for trying to make money. It's all I own, and I find it aggravating. I don't know. I find it aggravating that things get twisted around, that we are trying to be self-serving, and we are looking in the fact that perhaps we're wrong, and yet he's the one who isn't acknowledging the fact that maybe he's wrong, that maybe we're right, that maybe it is being suppressed, that there is a conspiracy to hold back the price of metals to make the Western system seem stronger than it is. And I guess in the end, only time will tell, but I sleep well at night, Chris, not only in purchasing it for myself and for my family, but telling people that by every metric that I can see, gold and silver are a life raft for what's coming next.
Well, I hear you. And again, perhaps what I was really trying to point out last week is it's definitely less than a straightforward situation, as many things are today. We won't get into what Jeff's thoughts about Klaus Schwab and his new economic structure, how he feels about that. But in either case, in wrapping up, Andy, if people have questions, if they want to buy or sell silver or gold, how do they do that and what's going on there?
So until our new website rolls out in August, we just want them to send us an email at Arcadia at Miles Franklin. Just simply put, send us the price list or any questions that you have. We'll know that it's coming directly from your listeners as it's going to Arcadia at Miles Franklin. But questions, we'll send an updated price list that's updated at least once per week. We'll make sure your listeners are getting the best price in the country and personalized service. And we appreciate them reaching out. We'll make darn sure it's a good experience.
Well, you can find out more, ask questions at arcadia@milesfranklin.com. And with that said, Andy, appreciate as always making some time for the weekly silver report and standing behind your words as I'm happy to do with mine. So with that said, we will see you again next week, sir.
One last thing before you say bye, don't forget we are offering for your listeners this week the 2022 Philharmonics, the Austrian Vienna Philharmonics. They're in stock. $5 over, 2022 Vienna Philharmonic. And we also probably still have some Britannias from last week's special, a few of them left over. So Britannia's Philharmonics, $5 over for your listeners. So appreciate it, Chris. I look very much forward to seeing you next week and picking up where we left off. Thanks for having me.
Well, thank you, Andy. I sure appreciate that. And sure appreciate everybody watching at home. Hope your weekend is off to a good start. And before wrapping up, just wanted to mention, here was the article I mentioned briefly by Ronan Manley, certainly well worth checking out. He's been doing a lot of great research into what is happening with Russia and what they are doing with gold. So you can find that on Bullion Star. And lastly, as always, thank you to Blackrock for bringing us today's episode. They actually did have some news out this week as they completed the synthesis of silver cloud data, and they've identified 10 priority drill targets. Do have a quote down here from Andrew Pollard mentioning a significant amount of new regional geophysical data was unearthed and licensed in the process, the result of which has led to a new understanding of the project. We have identified 10 high priority drill targets, and permitting is underway that will allow us to test these concepts in the fall. And fortunately, to hear a little bit more about that, well, there's a video walking you through the press release coming your way now.